Hamburg, November 1938. On the Ferdinandstrasse, a work crew clambers up a ladder with a wrench and a list. One by one, the brass letters come down from the stone facade. Warburg and Company. For more than a century, that name meant something in Germany. Imperial loans, overseas trade, quiet rescues when panic hits the markets. If you were an emperor short of money, or a shipping line drowning in debt, this is where you went. Now, under the Nazis' Aryanization, it's being erased. Inside, Max Warburg, advisor to Kaisers and chancellors, is forced out of the bank his family built. On paper, it looks like a familiar story, a Jewish banking dynasty crushed by a murderous regime, yet somehow surviving in exile. But zoom out just a few years earlier, and Max's brother Paul sat in Washington, inside the marbled halls of a brand new institution, the Federal Reserve. He had helped design it. He had written parts of the blueprint for America's central bank. So while one Warburg name is scraped off a wall in Hamburg, another Warburg imprint is etched into the operating system of global finance. The real question isn't just, how did the Warburgs survive every regime? It's this. How many of those regimes and the monetary systems that powered them did the Warburgs quietly help to build? Because you don't have to sit on the throne if you can write the rules of the money under the throne. Welcome back to Hidden Forces in History. I'm your host, Jeremy Ryan Slate, the CEO of Command Your Brand. We help our clients to appear on some of the biggest podcasts in the world. Check us out via the link in the description. And now, our story. To see how a family pushed outside the city walls ends up inside the wiring of empires, we start in the late 18th century Hamburg. On paper, Hamburg is a free city, independent, self-governing, rich on North Sea trade. In practice, its freedom has limits. One of those limits is drawn in stone. Jews cannot live within the city walls. So Jewish families cluster outside, in Altona and Wandsbek. Legally separate, socially marginal, but close enough to smell the harbor tar and count the mass. Among them is a clan that has taken its name from a small town inland, Warburg. They live in a familiar paradox, barred from land and guilds, but needed for one thing Christian doctrine has a problem with: lending it interest. Their first arena of power is not a throne, but a ledger. In 1798, a 36-year-old named Moses Marcus Warburg, with his brother Gerson, opens a small firm in Hamburg, Warburg and Company. No columns, no marble, a rented office, a few clerks, and piles of paper. What they understand better than many of the city's nobles is that Hamburg's strength is no longer feudal. It's financial. Ships leave with grain, timber, and cloth. They return with coffee, sugar, and cotton. But the real cargo is invisible. Bills of exchange, promissory notes, insurance contracts. A merchant in St. Petersburg needs to pay a manufacturer in Manchester. A grain dealer in Hamburg wants to buy before prices move. Nobody wants to wait months for silver to cross borders. They need someone to sit in the middle and say, I will pay you today, because I know you will pay me tomorrow. That someone increasingly is a Warburg. Their first hidden force is simple. They turn geography, squeezed outside of the walls, perched between Jewish and Christian worlds, between Baltic and Atlantic trade, into an information advantage. They know who owes whom, in which currency, and when. Napoleon's armies sweep across Europe. Treaties are torn up, and currencies are debased. For a small Hamburg house, this could be fatal. Instead, Warburg survives by doing what empire-level players do. They stay liquid. They stay cautious, and they stay connected. They diversify out of simple money lending into discounting commercial paper, foreign exchange, marine insurance. They don't lend to kings for glory. They finance merchants for margins. By the mid-19th century, the world changes again. Steam replaces sail, railways slice across the German states. What used to be a collection of regional markets starts to look like one industrial economy. Old-style court bankers like the Fuga had traded direct access to monarchs for control over mines and monopolies. The Warburgs are playing a subtler game. They don't own the factories. They control the credit that lets the factories expand. When a steel mill wants to upgrade its blast furnaces, when a shipping line wants to add a new route, when a grain firm wants to hedge a bad harvest, they don't go to a duke. They go to houses like Warburg. As the 19th century ticks on, invitations follow the money. Warburg takes seats on supervisory boards. They're consultant on tariffs, railway placement, and insurance law. They're still technically outsiders, but they're increasingly the people the insiders can't do without. A second rule of the Warburg playbook emerges. Don't storm the gate. Become indispensable to the gatekeeper. In 1871, Bismarck completes German unification. The German Empire is born. Berlin has an emperor, an army, and a foreign office. What it doesn't have yet is the modern financial plumbing to feed an industrial superpower. That job falls to a new breed of universal banks, institutions that don't just take deposits and make loans, but they sit on company boards and manage securities issues and knit entire sectors together. Deutsche Bank, Dresdner, Commerzbank, and in Hamburg, smaller but strategically placed, Warburg and Company. Into this world steps Max Warburg, born in 1867. Max is not a courtier to some prince, he's something new. A professional banker in an age when capital, not cavalry, decides whether an empire's plans are realistic. He trains in Frankfurt, Amsterdam, and New York. He studies not just bookkeeping, but systems. He learns that power is shifting from thrones to balance sheets, from titled aristocrats to what one observer calls the barons of credit. By the 1890s, Max is running the family bank. One crisis makes his reputation. A major Hamburg shipping company is on the brink. Freight rates crash and debt piles up. Creditors are ready to pull the plug. On its own, Warburg can't carry the risk. So Max does something important and very modern. He doesn't just lend, he organizes. He quietly assembles a consortium of Hamburg banks and insurers, spreads the exposure across them, restructures the company's debt, and keeps the shipping line and the city's maritime ambitions alive. He doesn't just save the client. He proves that Warburg is not just a money shop. It's an organizer of capital. By 1900, the family has climbed an extraordinary distance. From Jews banned from living inside the walls, to Jews advising the empire that now rules from Berlin. But so far, they are still working inside someone else's monetary system. The rules of the game, gold standards, interest rate policy, last resort lending, are decided in central banks that they don't control. That is about to change, because while Max is consolidating power in Hamburg and Berlin, his younger brother Paul is learning how to design the system itself. Paul Warburg is born into a banking family, but he doesn't stay in Hamburg long. He apprentices in London and Paris, and then lands in New York. There he marries another financial dynasty, the Loebs of Kuhn, Loeb and Company. If Max is the archetype of German universal banker, Paul is the system architect. In Europe, he has studied something Americans don't yet have, a modern central bank. He watches how the Bank of England quietly manages crises, how the Banque de France acts as a lender of last resort, how private banks, public treasuries, and central institutions form a power triangle. When he arrives in the United States in the early 1900s, What he finds horrifies him. Dozens of private banks. No central coordination. No reliable backstop. Panic after panic, the most dramatic comes in 1907, when a speculative attack nearly crashes the system. To Paul, this chaos is not just dangerous, it's an opening. He begins a campaign, writing articles, giving speeches, and lobbying behind the scenes for an institution Americans deeply distrust: a central bank. Officially, Americans have outlawed anything that looks like the old Bank of the United States. They fear concentrated financial power. Unofficially, the system is already concentrated, but in the hands of a few New York bankers, acting in crisis as an informal cartel. Paul's pitch is clever. He doesn't say, give more power to Wall Street. He says, rationalize the system. Make it scientific, national, modern. The details are worked out in one of the most famous and least democratic episodes in American financial history. A private rail car leaves New York at night. It blinds dawn. On board, a small group of bankers and politicians traveling under first names only. Their destination is Jekyll Island, a private club off the coast of Georgia. There, over days of duck hunting that involve very little shooting, they draft what will become the blueprint for the Federal Reserve System. Paul Warburg is there. He brings European central banking theory. He pushes for a network of regional reserve banks under a central bank coordinating board. A federalized compromise tailored to American suspicions. He does not put the Warburg name on the door. He doesn't have to. 3 years later, in 1913, the Federal Reserve Act passes. For the first time, the United States has a legally chartered central bank, empowered to manage the money supply, set discount rates, and act as a lender of last resort. Paul becomes a member and then the vice governor of the Federal Reserve Board. Warburg has moved from discounting bills in Hamburg to writing the rules of the world's future reserve currency. Back in Germany, Max is doing a different kind of system work. When World War I breaks out, Max Warburg is not just a private banker. He's now a central advisor to the German government on financial matters. He helps structure war loans. He weighs in on foreign exchange strategy against the British blockade. He sits near the table where decisions are made about how long the Reich can afford to fight. After Germany loses the war, the Versailles Treaty demands crushing reparations. On paper, these are political decisions. In practice, they're financial ones. How much gold actually exists? What does Germany earn in exports? What interest rate can its economy bear? These questions Max understands in his bones. During the early Weimar years, as hyperinflation destroys the mark, the Warburg Bank does not die with it. It hedges. It diversifies. It participates in the stabilization efforts that follow. The Dawes Plan, then the Young Plan. Packages designed with significant input from bankers and technocrats to restructure Germany's reparations and stabilize its currency. Once again, the Warburgs are not writing the peace treaties. They're helping write the implementation details that decide whether those treaties are survivable. A pattern emerges. Paul helps design the architecture of the American central banking. Max helps navigate and partially redesign the architecture of the German war, finance, reparations, and stabilization. They are not elected. They don't command armies. They shape regimes through the one thing every regime needs: a functioning money system. Then comes the regime that tests their entire strategy: the Third Reich. In 1933, Hitler becomes chancellor. For a Jewish banking family that has served the empire and the republic, sat on industrial boards, and advised ministries, there is a quiet assumption: we're too useful to be harmed. We are part of the system. At first, that assumption seems almost true. The Nazis inherit a fragile economy. They need exports, foreign exchange, experienced managers. Max Warburg is not immediately expelled. For a time, he even remains on some boards. His expertise is too valuable to lose overnight. Behind the scenes, he uses what influence he still has for something very different from profit. Helping Jews to immigrate, moving capital out, writing letters of reference that can mean the difference between a visa and a closed door. But the Nazi project is not a normal regime change. It's an attempt to rewrite who counts as part of the nation. By the late 1930s, Aryanization is an official policy. Jewish-owned businesses are forced into fire sale transfers. Assets are stripped, names are removed. And that's the scene we began with. Workers removing Warburg and Co. from the stone. In 1938, under pressure that's both legal and violently extra-legal, Max resigns. The bank is transferred to approved Aryan owners. The Warburgs scatter: London, New York, Stockholm, Palestine. On the surface, the family's German story has ended in defeat. But look more closely. Before 1933, branches of the Warburg family had already embedded themselves in multiple financial centers. Paul in New York, others in London, still others tied to Scandinavian and Middle Eastern ventures. The Hamburg institution can be stolen by decree. The know-how, the archives, the contacts, well, those are harder to confiscate. During the war, the Warburg diaspora plays a quieter role, advising Allied governments on German industry and finance, helping to design post-war reconstruction plans, participating in the early architecture around institutions like the Bank for International Settlements, and indirectly, Bretton Woods. Then after 1945, a final twist. Under Allied occupation, Germany's financial system is rebuilt. Denazification purges those too closely tied to the regime. The pre-Nazi financial houses are evaluated case by case. And in Hamburg, Warburg and Company is reconstituted under the Warburg name. The family that had been stripped of its bank by one regime is invited back to help rebuild under the next. It is the ultimate expression of their long-term bet. Don't just survive a regime. Make yourself necessary to whoever has to clean up the mess. In those earlier designs, Paul's central bank architecture in America, the habits of international cooperation in banking and reparations now feed directly into the post-war order. The Federal Reserve becomes the anchor of a dollar-based system. German banks, including a reborn Warburg House, plug into that system. A Nazi bureaucrat could remove a nameplate in 1938, but no one could remove Paul Warburg's fingerprints from the Federal Reserve Act, or from the idea that a neutral technocratic central bank should sit above the electoral politics. So did the Warburgs simply survive every regime, or did they help to build them? Look at the arc. A family pushed outside of Hamburg's walls leverages credit to slip inside its economy. A second generation climbs from merchant banking into industrial cooperation, wiring an empire's trade and shipping. A third helps design central banking structures that outlive emperors, parliaments, and dictators. They serve the Kaiser. They navigate Weimar. They are persecuted by the Nazis. They return to a democratic West Germany. And all that while, a Warburg-shaped institution, the Federal Reserve, quietly becomes the central nervous system of the world's reserve currency. Were the Warburgs omnipotent puppet masters? Well, no. They couldn't stop Napoleon or the trenches of 1914 or the rise of Hitler. But they were extraordinarily good at something more subtle, and in many ways more enduring, positioning themselves where regimes have no choice but to come to them. When an empire needs war loans, when a republic needs stabilization, when a superpower needs a central bank, the visible story is flags, speeches, coups, and elections. The hidden story is balance sheets, emergency loans, and the architecture of institutions that are labeled independent, technical, above politics. That's where the Warburgs lived. They didn't just survive regimes. They learned to embed themselves in every system the regime had to use. Same playbook, different century. Don't fight for the throne. Engineer the room where the throne has to ask for money. If you want to know who really holds power, don't stop at who signs the laws. Follow the people who wrote the laws of the money that makes those laws possible. Because kings fall, parliaments change, and even dictatorships end. But the operating system of money and the families who help write it have a way of surviving every regime by building the next one. This has been Hidden Forces in History. I'm Jeremy Ryan Slate. Please like this video, leave us a comment, and smash that subscribe button if you want more Hidden Forces in History.